he needs no introduction, as I mentioned before, and I keep mentioning, and I'm pretty sure it's worked its way into Chapman and Cutler's marketing material. The man who wrote the book, Marc Franson, is going to be moderating our next panel. Marc, are you up here and bring the panel on up?
Thanks, everyone, and Phil's already stolen some of the thunder, but every year we introduce the update to the publication, the regulation of marketplace lending, which actually some people have called the Bible of regulation in this space. So we're happy today to actually put forth our new November 2025 edition. Hard copies are going to be available in the roundtable room at 2 o'clock, and virtual versions are available on the website chapman.com. So I know many of you read it and look at it, so it is now available in its current edition. With that, I would like the panel to introduce themselves. So, Kate?
Sure. I'm Kate Layton. I'm the Chief Legal Officer and Corporate Secretary at Oportun. At Oportun, we aim to help our customers with financial stability by providing access to affordable credit and helping to build adequate savings.
Hi, I'm Christa Degnan, the Chief Product Officer at Bloom Credit, which is a bidirectional credit infrastructure company, so getting data into the financial ecosystem and getting it back out to make decisions.
I'm Robert Gonzalez. I'm General Counsel at Mercury. We provide radically different banking for startups and other growing companies, and we do so through our banking partners and other non-banking partners, so super excited to be here on this panel.
And I'm Katherine Adkins. I'm the CLO of Affirm, and Affirm is a online and also direct-to-consumer lender, and we pride ourselves on being transparent and offering consumer choice at point of sale.
So the panel today is about Bank-Fintech models and sustainability. We're not going to talk about what you do with your coffee grounds or carbon emissions or those kinds of green things. Rather, as the definition of sustainability is, how to continue over the long run. And we have certainly seen the conventional bank partnership model involved with many fintechs. And we've also seen some evolution in this particular space. We have seen, for instance, some fintechs get their own bank charter. And so the initial question on sustainability is, what is a sustainable bank fintech model? Is it what we've got? Is it something else? So we're going to start off with that. And Katherine, I'll let you lead off.
Great. Well, thank you. For us, a sustainable model is one in which both the bank and us as the fintech have the same vision of putting the customer first and figuring out the right financial products with that in mind. And we believe we provide the innovation, how to get to market quickly, how to innovate on products quickly, and the bank provides the necessary infrastructure in terms of, relationships with the regulators, understanding those regulations, compliance, various other things that banks bring to the table. And we think with the two of us, innovation is kind of the lifeblood of this ecosystem, and the banks are the beating heart of it. And together we are able to provide the best possible products to consumers. But you really have to start with having that shared vision of what the right thing is for the consumer in mind, bank and fintech.
Great. And Kate, you've been involved with some bank partnerships, so what are your views on its?
Yeah, I absolutely agree with what Katherine said. I think most fintechs, exist to solve a problem that, wasn't being solved by the traditional banking system. And so I think, being able to align up front on, sort of what is the vision, what is the bank's risk tolerance, innovation, and then kind of being able to work through those challenges together to get to the end result, I think is the key.
And Christa, you work with both fintechs and banks, particularly in providing data and credit information. Recently, we have, for instance, seen banks getting into the space and buying fintechs. Now, you've seen both sides of it. Do you see this as a potential trend or a sustainable model?
Sustainable, I don't know. I think it's a trend that will continue. I think as you think about why you do an acquisition in general, right? Speed to market, acquiring technology, acquiring talent, a different way to think about solving problems and getting that out in the marketplace quickly. I think you'll see more acquisitions as we go forward.
And of course, one thing that we see in this space is the challenges on the true lender side of things. And so we've seen sometimes different people doing different things and bifurcating functions. Robert, do you think we're going to see more of that? Some people doing one thing, others doing another?
Yeah, I think that's one of the beauties of technology is that fintechs are able to bring together lots of different best-in-class providers and really bundle that together and provide a seamless customer experience and really surface the best options to customers. So I don't think that's going anywhere. And in general, I think even though there's more regulatory appetite for fintechs to potentially consider getting a charter or for banks to acquire a fintech, I think if you're a 5-person, 10-person startup who's just trying to figure out, do you have product market fit? Does anyone want the thing you're making? I think the Bank-Fintech model is still very attractive in that situation.
So assuming that this model is sort of here to stay, at least in the short term and maybe in the long term, what are sort of some of the things that make the model work and, again, sustainable? And all of you have worked with bank partners in one shape or matter. So, Katherine, again, I'm going to ask you to sort of weigh in on that.
Yeah, okay. Well, it kind of goes back to what I said. It works when there is a lot of seamless transparency, if you will, between the bank and the fintech, lots of discussions. You've got to know where your banking partner, where their pain points are, what their pressures are in terms of their regulators, and vice versa. They need to really understand what your pressures are as you're going to market. And what makes it work is just constant communication and making sure that you ask the right questions. Avoid surprises if you can. I know that's hard to do, but hey, try. And for us, it's like we want to make our bank successful because that makes us successful. And I think that mindset on both sides really helps a lot.
Yeah, just to echo there, I think it requires really deep engagement. These aren't relationships that you can just turn on or off overnight. And one thing that we found is really helpful is to have connectivity sort of at all levels of the organization. So from senior leadership, but also across our legal teams, across our compliance teams, even on the engineering front, that really helps make sure the bank and the fintech both understand what each side is doing if you have connections throughout the organization.
So communication is key, right? Kate, what else?
Yeah, I would echo that. I mean, I think the key is partnership too. I mean, as Robert said, these are long-standing relationships, and I think, sometimes you are bringing something that's a little more new and novel, and so I think making sure, again, that it's fully vetted internally too, because the first thing that's going to happen when you get on the phone with the bank is they're going to look at the legal and compliance team and say, well, how did you guys get comfortable with this? So I think, making sure we've thought through all of that, and then again, like Katherine said, no surprises, and just being very transparent about what the end goal is, and, some willingness to have a little bit of, I think that tension is good, and, trying to work through the challenge together really in partnership.
And some of us lawyers don't like using the word partnership,
Yes.
right, because it has some other implications, but in this sense of communications and operations, it really is somewhat of a partnership. And Christa, you sort of see it from a service provider aspect, and so how do you make those long-term relationships work?
Yeah, I don't think that it's any different than what anyone else on the panel has already suggested, but just to kind of double click on it a little bit, it is definitely understanding kind of the roles and responsibilities of that shared vision, right? Where are we going? How are we going to get there? Who's playing which part? The more you can understand that, the more we can make that clear. Building those relationships from top to bottom so that everyone's got their touch points across the way will certainly help smooth when things go wrong, because things will go wrong. They do go wrong. There are misunderstandings. There are timelines. There are deadlines. There are things when you're building out technology capabilities and bringing products to market that go bump in the night. And when they do, it's better if you've built out that relationship ahead of time so you can work through them and seamlessly get to the other side.
Well, let's pick up on that a little, and that sort of is the next topic, and that's sort of what sort of drives a wedge in between this partnership, in between some of this communications, and then how do we sort of work to, resolve all of those certain things. So, Kate, we'll start with you.
Sure. Again, I think communication is key, so no surprises. I mean, I think one of the other things that is really important to us is speed, and being able to move quickly, to address customer issues. We do a lot of financing, so if there's something the bank needs to look at, to be able to, obviously, I want to see everything that's being said about our company publicly, so understood, that they want to review all of that too. But again, and I think it's sort of the onus is on us to make sure that we're giving them as much, heads up that something's coming as possible so they can move quickly. But I think that that's where, sometimes you run into potential issues where something may get bogged down in discussion that, your business people really want to get into the market, and, there's just more things that need to be worked through. So, but again, I think it all comes back to communication and just being very clear about what the end goal is and what the expectations are on both sides.
And that really is part of the tension, right? Because there's speed on one side, and then the bank's in there and wanting to look at everything. So, Robert, how do you look at those things and other things?
Well, the other thing I'll add that I think has added tension and made some of these relationships more difficult is the lack of clear standards, right? So these bank-fintech partnerships are not, generally haven't been around for hundreds of years. There's not a super well-established regulatory framework. And one thing that we've been working on with our partners and in the industry is really trying to help develop shared standards for these partnerships and what good really looks like. The Coalition for Financial Ecosystem Standards has done great work. I think SEMA was around or is around. So we've been very happy to be involved in that. I also understand now that the FDIC and maybe some of the other regulators are potentially working on their own standard setting type initiatives. And so I think that will directly address one of the biggest issues around these partnerships is making it really clear what the expectation is for how they should operate.
And hopefully not many of you have faced this, but sometimes both the bank and the fintech get involved in nasty things like litigation, and this can sometimes not necessarily, you're always on the same side of the fence on some of these things. So I don't know if anyone has any comments on how to look at that or handle that, and maybe Katherine, I'll turn to you.
Well, knock wood, we really haven't had a situation like big litigation arise where we'd be adverse to our bank partners. Hope that continues, but I would say by and large, if something like that did, not to be redundant again, but it all comes down to communication and being super clear. And upfront, like, hey, our interests may not be aligned, so we may need to go in a different direction, and just laying that out. Should an issue like that arise, that's how I would handle it. So if it would be clearer upfront as much as possible that there is an adversarial relationship ahead. The problem is the day-to-day management then has to continue. And that's where your business people have to be able to come in and continue managing the relationship, notwithstanding some big litigation that you might be adverse to your partner on. That's the complication that I would see in that kind of situation that would be challenging to work through. Again, knock wood, we haven't had that issue.
Yeah, I was going to say, Marc, I think back to your question about sort of what can drive a wedge too. I mean, again, like Katherine, we fortunately haven't had any issues, but I think one thing that is a little tricky to work through sometimes is the privilege issue, where you want to be super transparent with your bank partner, but you do have to be careful, if something is going on about kind of how much you're sharing, when, and about what. But
And some of that dovetails into compliance, right? And things have vastly changed, right? A year ago, when we were all here, it was a much different regulatory environment. We've again seen some evolution on that front. Some would say in the early days of the partnership model, there wasn't a lot of compliance oversight. We all then saw some problems in that particular space, and we've seen The regulators come down on it with guidance, consent orders, and now we have a sort of a new regulatory environment that's a little bit different. So what does that sort of mean for all of you in the bank partnership model? Are we pulling back on compliance? Is the pedal still to the metal, or are we putting the brakes on? So sort of what's happening there? I'll start with you again, Kate.
Sure, I think, I think we've seen our bank partner loosen up a little bit, but I think everybody's trying to, we've been talking about this on the business side too. You don't want to whipsaw the business, right? But it's not like the administration changed and all of a sudden all the rules are out the window. And I think for the most part, the things that the bank partners expect are things that we, especially on the legal compliance side, think are just best practices. So, even if they said we have no rules anymore at all, I still think having, third-party risk management or, all the other things that we just do as a best practice are still important. So, there may be slightly different pain points for the bank, but again, we haven't seen things change dramatically, but I do think it enables a little bit of a conversation about kind of what is that risk tolerance, and if they're asking for something that's extremely extensive, I think there's at least an opening to say, this is going to be extremely, costly or time intensive. Like, can we talk about whether this is really something you really need, or is there a different way to solve this?
And Robert, what do you see there?
Yeah, there's certainly a much more sort of welcoming environment, especially across leadership at the regulators for fintech, and an appetite for direct engagement, which we appreciate. But that doesn't mean that we're just letting off the brakes on the compliance investments that we've been making. A lot of these we actually started before kind of this wave of consent orders came around, and we did it because it was the right thing to do to build for the scale of our business and the complexity of our business, and we don't think about it in these 4-year cycles. We want to build something that lasts multiple administrations down the road, regardless of who's in charge. So yeah, the message we've been sending the team is keep building. This is the right thing to do. These are the right things to invest in, and just stick to our plan. But yeah, we definitely also welcome the direct engagement with the regulators that we've been able to have, especially recently.
And Christa, you sort of see this from the service provider side, and so have you seen things change or things getting different? Tell us about that.
Yeah, I think we've seen some of the same changes, that we just described here. I think going from the past where heavy regulation does require investment, does require time, does require effort to make sure that you're meeting the needs of all of your partners. And then seeing that kind of move a little bit and shift into not necessarily less regulation, but I would say what we're more seeing is an openness to have a conversation about where should we collectively be heading together, right? You can't have no regulation. You can't have such strict regulation that you're stifling, innovation. Somewhere in the middle is where that, needs to land. And I think one of the challenges we have now is where is that middle that we're kind of working through together with our partnerships in absence of anything else that's putting pressure one way or the other.
Sustainable, right? With
Yep.
whoever's in office, right?
Exactly.
Catherine, you want to add anything to this?
Yeah, I would kind of piggyback on what you just said, that it's just a nicer conversation with the regulators right now. They're more friendly, they're more open, but they still have a job to do, and they're continuing to do their job. So while blood pressure would rise before you'd have those conversations before, maybe it doesn't rise as high. And you can have more of an open dialogue with them, but at the end of the day, the job's the job. And I just feel like you said, if you're building for the long term, all of this is temporary, and you have to figure out how to navigate through the temporary. It's just a little more pleasant now. I'm not mad about it.
Well, and that's the way it was in the past, right?
Right.
Before some things happened, and there was dialogue, and that dialogue helps everyone do their compliance job, right? So.
Yeah.
One thing that hasn't been mentioned too much here today is the decision that came out recently in Colorado in the 10th Circuit in terms of opt-out. And so one of the questions is, if more states follow this and opt out of federal preemption for state banks? Is this going to mean there's going to be a need for sort of multiple bank partners if you're with a state bank, or are state banks going to move toward the OCC charter, or just sort of what's going to happen on that? And not that anyone knows, but what's our crystal ball saying? Kate?
I think we're, I don't know if I'm the best person to answer this question, because we're lucky in that we work with an OCC chartered bank. So, I mean, we're obviously watching the Colorado decision carefully, but maybe not as carefully as some of the others that are, working directly with the state chartered bank.
Robert?
Yeah, I won't dive into the 10th Circuit decision or potential implications there, but I will say on the point of multiple bank partners, and sort of touching on the same point I made earlier, that it's really critical to have like the best in class for whatever you're trying to serve the customer, right? So it might mean having multiple bank partners. It might be having one bank partner for a certain type of product and another bank partner for a different type of product, or even bringing in other technology providers, non-bank technology providers who can provide things like card processing or international wires. So really, we aim to like have the best possible options for our customers and really do the work on the back end to make sure that's seamless for them. And a key part of that is also like the redundancy aspect, right? I think if you're a fintech, whether you're just getting started or whether you're scaling, it's really important to have that redundancy, right? You don't know what's going to happen with a bank partner. You try to do your diligence and really understand what's going on in their world, but things can happen that can limit their growth, or limit their risk appetite, limit their ability to serve certain markets or customers. So having optionality and redundancy is super important to making these sustainable.
Good backup plan, right, Katherine?
Exactly.
Yeah, the same. We partner with state chartered banks, don't have any OCC, there wasn't a lot of appetite. Maybe there will be now. It's super hard to predict, I think Robert's right. And so for us, it's all about risk management. What's the product market fit? Who's the right partner for the various products? It's not easy to change charters, let's face it. So we'll see what happens with it. But the litigation has a fairly long runway, I think.
Not tomorrow, right?
No,
Okay,
this will not be
yeah.
solved
And
tomorrow.
Christa, you sort of look at it again from the service provider view. So how easy or how difficult would it be to serve multiple banks in a program?
We are used to that, right? I think it goes into, there's partly redundancy. So you want to make sure that whoever you're working with, right, you understand what am I getting from them, what's the integration look like, and then what's your backup plan, right? We're in an industry that is very fast-paced. It changes all the time. Who's here today, it may not be here tomorrow, and we need to make sure that we're positioned for that. When you think about kind of, working with partners at all scales, it's just kind of the way it is today.
And that sort of brings us to more or less the last topic, and that is, what happens in a worst case scenario? Maybe something happens to the bank, maybe something's going on with the fintech, maybe an asset-based lender is having to come in because of a default. So what happens in situations like that? It certainly is costly and complex, and potential for a lot of customer disruption to happen. How do we plan for things like that? What do we do? Or maybe we don't care, we're not going to be around anymore, or I don't know. But Katherine, I'll start with you.
Well, first, if you have a good risk management program where you have some redundancy in your partnerships, that helps a ton. And you have to do scenario planning. And we originate through third-party banks and then sell into the capital markets. And so you have to think about both ends of that spectrum and make sure that the whole ecosystem is provided for. And if you're going to have to move banks, literally take a portfolio to move to a different bank, that is an entire process in and of itself. And depending upon what happens, from the banking perspective, if it's, taken over by a regulator or whatever, there is a systematic process for doing that. But it's a ton of work to manage through that.
Yeah, I think it's super important to invest up front and really understand sort of the dynamics of the relationship. So we really treat those partnerships not just as like a contract that we're signing, but as a key sort of product dependency, operational dependency, really a key part of our business. And we invest the time to understand, right, what happens with the customer data if the relationship were to terminate, what happens with the card numbers, the account numbers. How could you carry out a migration? Would you be able to do an assumption of deposits to a new bank partner? Like really understanding those issues from sort of the legal perspective, but also the operational and risk perspective is super important, because as we said earlier, like these aren't things that you can just flip on or off overnight, right? Some of these migrations can take months, if not years, to plan and execute well. So it's worth investing the time up front.
Well, and I think your points around, right, understanding how you can move things around, right? If it's data, how do you move data? If it's accounts, how do you move accounts? Where we can kind of come in as service providers, as fintechs, is helping kind of guide through the discussion points of here's how some of the solutions work that are being implemented today, but also here's how some of the solutions that may exist out there could also help in some of these instances moving forward, should that happen.
And we really haven't seen a lot of meltdown situations, and we know there's a lot of backup servicers out there, but do we really know, Christa, whether they really work or not? Or?
Well, you don't really know until you put them to the test, do you? Let's hope so.
You do a lot of praying, right? Okay. Add anything else, Kate?
No, I mean, I think that we haven't seen, obviously, the needed to move off of a bank platform because of an issue, but we did, we sold a product and a portfolio, and so the only advice I would give there is, I think you do have to approach it kind of like Robert said, as a, essentially an onboarding and operational transaction. So, there's absolutely a role for the bank, and in that case, you had banks on either side, and so making sure that there's good communication, that you're planning for those operational transitions. Our goal was to make sure there was no interruption to the customers, and so it really was kind of a fine dance, and you have to make sure you get everybody at the table to work through those issues and make sure, kind of everybody's got their, specifics on the table, so you can work through how to work through that together to make sure there's no interruption for the customer.
And sometimes working with those banks isn't all that easy, is it? But
I think we were lucky in that we had good partners on all sides of, partners on all sides of the transaction, but it was definitely a process, for sure.
Right. Well, we're just about out of time here. So does anyone else want to add anything about sustainability of bank partnership models? And we'll just go down the line, and Katherine, we'll start with you.
Yeah, I would just say that the biggest contributing factor to success is the communication piece, like I started with at the very beginning. And the more you can communicate and make sure that you're connected with your partner, the more success you're going to have, because it is absolutely synergistic. Each success is the other success.
Yeah, she said it perfectly, but transparency, deep engagement, scenario planning, upfront investment, those are the takeaways I have from this discussion.
Yeah, I think creating that shared vision and keeping those lines of communication as open as you can.
Yeah, I would agree with everything everybody said. I mean, I think the goal for everyone is, success and compliance, and so nothing else to add.
So maybe this thing about partnership really is a partnership, right? That's what we're saying, and that's what makes it sustainable. And so I would like to thank all of the panel members for lending a hand to this session. So thank you.
Thanks, Marc.
Thank you, Marc.